Many oscillators attempt to measure how much buying or selling power lies behind the price move on a chart. Many do this by means of a single indicator that measures momentum. Some well-known trading indicators that work this way include the relative strength index, the force index, or the money flow index. But there is another indicator, known as the Elder Ray Index, that attempts to evaluate both bullish and bearish forces in the market by using two separate measures, one for each type of directional pressure. The technique was developed by Alexander Elder, and the two indicators involved are called Bull's Power and Bear's Power. The Elder Ray Index is quite easy to use once you understand how to read the various components. With the indicator, you can identify the strength of the bulls and bears and to predict the most likely direction the price may move next. At its core, it's a trend following indicator that also tells you when to open and close your trades. Elder Ray Index consists of three indicators: an exponential moving average, the bull power indicator, and the bear power indicator. The EMA is often plotted on the price chart as a separate component of the index, but it's also used in calculating the bull power and the bear power components of the index. By default, the EMA is a 13-period exponential moving average of the closing prices, but you can use any period you want. What matters is that you use the same period for the bull power and the bear power components. The bull power indicator component of the Elder Ray Index shows the relation between the day's high price and the EMA. It checks whether the day's high is above or below the EMA and measures the difference between them. The bull power is calculated by subtracting the EMA from the day's high. The bear power shows the relation between the day's low and the EMA. It checks the position of the day's low when compared with the EMA and measures the distance between them. To get the bear power, you subtract the EMA from the low price of that trading day. As with the bull power, the bear power is plotted as a histogram in a separate indicator box. Bear's power indicator attempts to measure the market's appetite for lower prices. Bull's power indicator attempts to measure the market's appetite for higher prices. Both do this by making a comparison to a third measure to see where the consensus of value lies within the market. And typically a 13-period exponential moving average is used for this baseline of value. The moving average shows us the average consensus of value for the window of observation over which the prices are averaged. If bulls gain the upper hand, prices rise, and the slope of the moving average will be upward. If bears gain the upper hand, prices fall, and the slope of the moving average will be downward. In this way, Elder Ray strategy combines an element of both trend-following indicators and oscillators. The exponential moving average is a trend-following measure. This operates as a kind of filter, allowing only trades in the direction of the trend. The bull's power and the bear's power elements are oscillators. Using all three together should in theory enable you to decide whether bulls or bears are stronger, and then position yourself with the dominant force in the market accordingly. Now let's talk about the psychology behind the Elder Ray Index. The price of any security is a reflection of the market participants' sentiments, especially fear and greed, which is what the Elder Ray Index tries to show. The indicator assumes that during an up move, buyers get more greed and keep buying closer to the highs, while during a downward move, the bears get more afraid the lower the price falls and keep selling closer to lows. Now, by comparing the day's high price to the EMA, the bull power indicator shows the ability of bulls to push prices higher than the average. Hence, when the bulls are dominating, the bull power indicator rises. And when the bulls are losing momentum, the bull power indicator falls and can fall below the zero line. On the other hand, the bear power indicator shows the ability of bears to push prices below the moving average. When the bears are weaker, the gap between the day's low and the EMA widens, and when they are stronger, the gap narrows and can even become positive if the bulls have completely taken control. So by measuring the distance from the high price of the day to the EMA, bull power represents the capacity of bulls to push prices above the average consensus of value. Bull power rises when bulls are stronger and falls when they are weaker, even becoming negative when they are very weak. Bear power, by contrast, is the capacity of bears to push prices below the moving average. The distance between the low and the EMA, which widens when the bears are weaker and narrows when they are stronger, gives the figure. Remember, bear power is typically negative, so if it turns positive, the bulls have taken complete control. So how to trade with Elder Ray Index? To get a full picture of the market situation, you need to read all three components simultaneously. For the EMA, you consider the slope as it can show the direction of the trend. Since the bull power and bear power are plotted as histograms, you consider the position of the histograms relative to the zero line and whether they are increasing or reducing. Another aspect to consider about the bull and bear power histograms is a divergence from the price. A divergence is said to occur when the histograms and the price swings are not making similar highs or lows. There is a bullish divergence if the bear power histogram is making a higher low when the price is making a lower low. A bearish divergence occurs when the bull power makes a lower high when the price makes a higher high. We have a buying opportunity when the EMA is sloping upward, indicating that the trend is up. The bear power histogram is negative, below the zero line, but rising, and the bull power histogram is rising, getting more bullish. Additionally, the setup is considered stronger if there is a bullish divergence in the bear power histogram. That is, if the bear power makes a higher low when the price makes a lower low, you have a better buy setup. Here are several examples of buy signals. We have a selling opportunity when the EMA is sloping downward, indicating a possible downtrend. The bull power histogram is positive, above zero line but falling, and the bear power histogram is falling, getting more bearish. Furthermore, if there is a bearish divergence in the bull power histogram, the sell setup is very strong. In other words, if the bull power makes a lower high when the price is making a higher swing high, there is a really strong sell setup. Here are other examples of sell signals. As you can see, the trading rules for the Elder Ray system are fairly simple. The slope of the EMA suggests the direction of the trend, and you are only allowed to trade in the same direction as the trend. Bull's power and bear's power help you to identify entry and exit points. Bullish divergences in bear's power should identify optimal opportunities for a long entry. Furthermore, the exit signal is given when prices reach a new high, but bull's power fails to reach a new peak. This is a sign that the influence of bulls is starting to diminish in the market. Bearish divergences in bull's power should identify optimal opportunities for a short entry. The exit signal is given when prices reach a new low, but bear's power fails to reach a new low. This is a sign that the influence of bears is starting to decrease in the market. While the combination of bull's power, bear's power, and the EMA reveals useful information about the market, Elder Ray system is best used with other forms of technical analysis. So draw your support and resistance levels, find areas of supply and demand, and try to find signals around those areas. This will allow you to gain a deeper understanding of what is happening in the market by considering wider aspects of data. Now regarding the time frame. Although the Elder system can be used on any time frame, I strongly advise you to use it on a daily time frame as a swing trading strategy, with most larger institutions using the daily close prices to analyze the markets. Daily bars also become a lot more significant than any other time frame. From my backtesting, the daily chart is the most reliable time frame for this system, for stocks in particular. By using this strategy on the daily time frame, you'll get less market noise, and this is perhaps the biggest advantage of the daily time frame. One of the main limitations of the Elder Ray Index is that the EMA component can lag the price action by a lot, since it is derived from the historical price data, so it doesn't respond quickly to a sudden change in the price direction. By the time the indicator shows a signal, the price must have moved significantly, making it difficult to find a good spot for your stop-loss order. Another limitation is that the bull power and bear power components can whipsaw quite a lot, as they oscillate around the zero line. That's why it's better to wait for a divergence signal or confirm with the EMA before making any trade. As always, if you learned something new and found value, leave us a like to show your support. subscribe to our channel and hit the bell icon to stay notified when we upload new videos. Until next time.